Hello and welcome to a webinar with Impact Specialist Finance and the Mortgage Lender. I'm delighted to have with me Richard, who is the National Account Manager from TML. And Richard will go through a few areas where TML can assist you and your buy-to-let clients. So what I'll do in the meantime is I will just step back a little bit and I'll fire some questions at Richard as we go through the presentation. But in the meantime, Richard, over to you. Tell us what you're going to go through today.
The market over the summer and what the market looks like today. I'm also going to touch on how we managed to lend through that lockdown period and how we actually ended up having record months right the way across the board for new inquiries, dips, applications, offers, completions. I'm then going to give you a snapshot of the rental market as well. And I'm going to cover product availability and what impact COVID has had on product availability. I've got a lot of key criteria and I'm going to share with you the sort of stuff that's been really useful to brokers and their clients. And then I'll finish off by chatting about our popular products and bring to life a couple of products that have been very, very successful for us over these last few weeks and months. So first of all, what I'd like to do is have a look at what's happened this year from both a broker's and a lender's perspective. So let's have a look at activity. We can measure activity in a number of ways, but let's have a look at broker activity because that drives everything. You know, what you people are doing in terms of your conversations with your clients drives everything from a lender's perspective in terms of inquiries, dips, applications, etc. Now, as you can see across the top, there are pointers there. Now, these show the number of searches that were made by brokers for buy-to-let products in each month. The circles at the bottom show the previous month, and the arrows show an increase or decrease in the number of searches. Now, when you look at these figures, you can see that pre-pandemic, there were 204,000 buy-to-let searches for products in February. And that figure fell to 122,000 in April. That's nearly a third. That's a big decrease. However, you can then see a recovery. And certainly by June, we were back to normal numbers. In fact, when you look at it, in June, we were above February's figures. I appreciate there probably was some carryover from April and May, but the trend is very, very strong. And when you move on and look at July, for example, there were 234,000 searches, which is nearly double the figure for April. That trend is continuing. The latest data that I can share with you on the screen shows 196,000 searches. That's for a part month in August. We're certainly seeing more demand than ever, and you are as well. Things are very buoyant at the moment. Will that continue? I think so, but clearly time will tell. On the next slide, I just want to share with you some information we have around rental demand. Now, if we go to the top left-hand side of the screen, you can see at the beginning of March, before lockdown, if we said, for example, rental demand was 100, you'll see that the numbers are climbing. And then demand then drops roughly a week before the government put us all into lockdown. Demand plummets, which is not surprising, with letting agents and estate agents having to close their doors. I guess that was bound to happen. You can then see that rental demand actually bottoms out around about the 30th of March. And then we start to see a bounce back with a substantial increase of 30% going into April and May. Along the bottom of the screen, there are some positive and negative factors. I'll just pick a couple of these out for you. Certainly, the one thing that jumps out there are the record levels of rental inquiries. When Rightmove say that they've seen a 33% increase in inquiries for the same period in 2020 compared to 2019, that's fantastic. But when you also drop in there the fact that, you know, everything was closed for a good 2, 3, 4 months, that just makes that increase even more impressive. What's driving this increase in demand? There's a number of factors. One of them is the lower supply of high LTV mortgages. And certainly the challenge is to try and unblock that situation and create more high loan to value residential mortgages. Certainly with Boris's announcement yesterday of government backing for high LTV mortgages, that could have an issue, that could have a real impact and unblock that issue for everybody. As far as negatives with regards to rental demand, well, certainly unemployment is going to have a huge impact. Unfortunately, with things like the ending of the furlough scheme, it's going to mean that that's going to make it much, much more difficult for people to have income to be able to service their rental. The other factors that will come into play are that we're seeing a potential higher impact on certain sectors. So, for example, student lets, students, and renters that work in the hospitality sector. So that's got a potential for lower rental growth. Having said that, over the course of the summer, we took a lot of calls about student lets. We continue to lend on student lets, and we still lend on student lets. From our perspective, it's about looking at those type of inquiries and just getting a clear grasp on what are the plans of the applicant, of the borrower, and does he have cash in the bank to cover potential rental voids. The next slide looks at product availability. Now, essentially, all we need to look at here are the 4 rows: 1st of March, 1st of April, 1st of July, and 22nd of September. I won't go through them line by line, but I'd just like to give you a flavour around product availability over that period of March to September. So if you take, for example, 2-year fixed rates at 80% loan to value, at the beginning of March, there were 141 products available. We've then seen that drop substantially on the 1st of July to only 56. On the 22nd of September, we've seen an uptick again to 96. However, the one that really jumps out here is 2-year fixed rate at 75% and 5-year fixed rate at 75%. Product availability for those at the beginning of March was very, very low. And certainly on 2-year money, by the 1st of July, we're up to 568 products. The 75% market is more competitive than it's ever been, and is a very, very good place for us to be as a lender. So let's have a look at how we can help you and your clients. So our criteria strengths for applicants: first of all, we do not have a minimum income rule. So provided the applicants are employed, self-employed, retired, or a professional landlord, the key here is to make sure that we're not going to ask a question of, have you got £25,000 income a year? The key here is, have you got enough money to cover potential rental voids? And provided the client has, we're good to go. We lend a maximum of 75%. I think what's important to flag here is that we charge a completion fee. Unlike many other lenders, we will add that completion fee at 75%. So we'll do 75% plus the completion fee, and we will not include that completion fee within our rental calculation either. So that gives your client more money in their pocket. You're not going to have a situation where they've applied for 75% and we're then going to deduct a couple of percent as a completion fee. Unlike many lenders, we don't treat communications or utility defaults as adverse. And where we see a lot of demand is where the landlord, for some reason, may not have transferred the utility bill out of his name into the tenant's name. And he may well have then picked up a subsequent default from, the gas company, etc., etc., etc. The other criteria strong point that we do very well on is our 6-month ownership rule. If the client has purchased the property originally, either with a bridging loan, paid cash for it, or inherited it, we will scrap that 6-month ownership rule, and we will then let the client remortgage to us on a day one basis. What we tend to see are clients that have purchased through a bridge and want to then refinance away from that bridge. And typically what we get asked for is, can we have the original purchase price, please, plus the cost of works? And from our perspective, that's a no-brainer. We can do those all day long. With regards to affordability, I think this slide is very self-explanatory, so I'm not going to go through it. It is worth noting, however, that on all 5-year fixed rate products, the rental calculation is 140% at pay rate, regardless of whether it's a limited company, SPV, or an individual. So, on lending, we're finding that we've got a lot of demand at the moment for expat mortgages. The key point here is that the applicants have either got to be employed with a minimum income of 40,000 or self-employed with a minimum income equivalent to £60,000. We do very well on the smaller properties, so with a minimum property value of £50,000, that can mean that the yields are a lot better than some of those higher value properties. We will also allow capital raising on all refinances up to 75%. One key point here is that if the client wants to raise money, perhaps to go and buy another buy-to-let, we're fine with that. We just need to follow the money, and we just need to see what are they buying, what is it, where is it, etc. We won't just pay that money into the client's bank account. So portfolios, that's an area that we've seen grow and grow and grow. And these are probably the 3 main reasons for that. We don't have a limit on the number of properties that you can bring over to us. The only thing that we will limit is the maximum value that we'll lend. That's £5 million. So, we could do 10 properties for £500,000. The only caveat I would put against that is that what we're not interested in is the client bringing over their entire portfolio to us. We don't want to have an exposure issue there where somebody's trying to bring over 20 properties to us. And certainly Dale at the team at Impact are very good at being able to work through those sort of situations for you and help you achieve a balance of lenders. We also don't have a limit on the number of properties in the background. What we will do is we will assess the overall balance of the portfolio. So we will look at that and say, overall, does that work? Rather than a line-by-line analysis of each individual property. When we actually analyse that background portfolio, what we ask is that our own portfolio form is completed, or we will accept e-text form that you can obtain from their website. And then on a final point there, we have a specialist portfolio underwriting team, and their remit is only to look after portfolio business. So you'll have lots of meaningful contact with them. they're looking to help, they're looking to lend, they do lots of portfolio business, so they're very, very experienced in that part of the market.
Richard, just on that,
Yeah.
we have a lot of buy-to-let clients who may have taken a payment holiday, and obviously it was phrased the worst possible way, it being a holiday. Obviously, it should have been a mortgage payment deferment. We've also had some buy-to-let landlords take out bounce-back loans, and maybe the odd one or two has taken a civils entity. What's your view on those for a portfolio landlord?
So the good news, Dale, is that we're not a tick box lender. We're not going to sit here and say, right, all of those type of borrowers are going to be excluded from taking a TML mortgage. We want to understand the situation. It may well be that you've got an applicant who's self-employed, has got a trading business and has got a portfolio. And they may have made a conscious decision to offer their tenants a payment holiday on their rent. Now that's a different scenario to somebody that said, hey, I can have a payment holiday. I don't have to pay anything. We just need to analyze and work out the differences between the two. So the answer is yes, we will consider people who've had bounce back loans. Yes, we will consider people that have taken payment holidays. It comes down to the positives of the case. And Dale, you and the team at Impact, once again, are really strong on being able to work out, is that plausible? What's the lender going to be comfortable with? And we would have those conversations with you. So it's not a store.
No, fair play. And just whilst on that scenario, there's plenty of delays in the market at the moment. What are your service level agreements at TML? And also, how are you finding valuers at the moment? Because we're hearing lots of stories when we go into instruct valuers that are taking quite a long time to actually get the job done.
So at the moment, from a valuer perspective, we are able to do physical valuations on properties, which is great news, but so are lots of other lenders. That has caused some delays. Ways in which we can try and help the client is that we can instruct a valuation as soon as possible before actually fully underwriting the case. That would be done on the basis of, hey, if something comes out during underwriting that means we can't proceed, we may not be able to refund the fee, but we can try and move these cases along as quickly as possible. One thing that we're doing at the moment is that whenever we get an application in, we are making a day one call to everybody and saying, hey guys, if you can give us this, 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 and this, we'll be able to move this case along really quickly for you. And that's working very well. It's helping us get those cases through to the valuers as quickly as possible. Now, at the moment, valuers are able to do physical instructions on properties. If we were to go into a full lockdown again, we would be able to consider using desktop valuations once more. With regards to service, well, if you visit our website, we publish our service turnarounds. At the moment, we're very good. And certainly it's a movable beast. It's dependent upon volumes of business, but certainly at the moment, we're very good. If you visit our website, you don't even have to log in, drag the slide bar across from the right-hand side, and you'll see where we are with regards to service.
Cool, thank you.
It's okay. So I'd just like to talk about a couple of products that we launched. We launched these recently and they've gone down really, really well. First of all, large loans. We've always been in that market. One of the sticking points that we identified for large loans wasn't necessarily the rates, because the rates were there or thereabouts, but the sticking point was the completion fee. So as an example, on a large loan, we used to charge 2.5%. So that meant on a £1 million case, which isn't too uncommon these days, the fee that would have been charged to the client was £25,000. We've now reduced that down to 0.75. So instead of paying £25,000, the client will pay £7,500. And once again, I think it's really important to stress what I said right at the beginning. We will add that completion fee, even at the max LTV, and we will not take that fee into account when we're doing our rental calculation. We've also launched into what we call buy-to-let multi-loan product. That one rolls off the tongue easily, doesn't it? These products are really designed for portfolio landlords, and they're designed for people that want to give us more than one application, either simultaneously or within a period of, say, 6 months. Now, provided that's the case, what we'll do is we will say to those clients, okay, there are reduced completion fees here, and for your second application onwards, there will be no application fees either. Now, rate-wise, large loan, we're coming in at 359, and on multi-loan, we're coming in on 339, both very, very competitive rates. So, you get a double Halloween face there, ladies and gents. That's all I've got to say. If anybody's got any questions, I'm more than happy to take them.
So a couple of others that have been emailed to me. HMOs, obviously very much on the increase at the moment. Are you seeing a sort of north-south divide with regards to people chasing rental yields?
Yes. So from our perspective, yes, we're in the HMO market. Yes, we're in the student let market. Yes, we're in the multi-unit market. We will lend on HMOs maximum of 6 bedrooms, but certainly there is a north-south divide. People are chasing those yields, primarily in and around the northwest.
Okay. And what's your views on issues on the horizon with buy-to-let, and how do you see the rest of 2020 panning out?
Wow. If I knew the answer to that, I'd be sat on a sunny island somewhere, wouldn't I? So with regards to buy-to-let, I don't see it as an issue. I see this as being a real benefit for consumers and brokers, insofar as that we're starting to see lenders return to the market. There's going to be a lot more choice out there. I think that with regards to a broker and how they would approach that, I think you just work with the lenders that you can trust, work with the lenders that have lent through the pandemic, and we have, and work with the lenders that are prepared to consider a case. Not saying I'm going to do it, but will you consider a case? Don't just have a tick box approach. Certainly in terms of any threats to the buy-to-let market, as I mentioned earlier, I think any kind of significant increase in unemployment is going to have a real downward pressure on people's ability to pay their rents. Whether you're going to see universities locking down and students being sent out of their halls of residence and their student lets to go home and do their courses online, that could have an impact as well. But in the main, we're positive. We're seeing more lenders return to the market, greater competition and greater choice.
Brilliant. I think that's a really good way to end this presentation on. So thank you, Richard. Thank you for your time. Really appreciate it, and a good insight to TML. Thank you for watching. I hope you found that useful. And any scenarios, specialist lending on that side that we can help with, please get in contact with Impact Specialist Finance. Please watch out for more of these. We've got these now weekly moving forward. We'll send you out an email shortly with an invite. In the meantime, thank you for your time and keep well.
Thank you. Goodbye.